Hello traders, welcome to this series of educational videos that FXCM has for you. My name is David Londoño. I'm a trader and market analyst. On today's videos, I would like to talk to you about trading across multiple timeframes or combining analysis from different timeframes. This is a great opportunity for me because I would like to share with you, I will say, a fragment of my personal strategies. This is called the triple screen, and it's not mine, comes from the book Trading for a Living, and it was developed for my mentor. It's very simple. Once we get into there, I will start telling you about this triple screen scenario. We will have three different time frames. We'll have a higher one, which is our framework or our workspace. Right? In the medium time frame, we have the trade management. Now, over there, we will check about the structures and liquidity was taken or something like that. And on the third time frame, the lower one, we have the time and our entry points. Before I show you an example of this strategy, I want to tell you that this triple screen can be worked on any type of trading you are, trader you are. For example, if you are a position trader, your three screens or your three time frames will be, the higher one would be monthly, the middle one will be the weekly, and the lower time frame will be the daily chart. For example, if you are a short-term trader, the higher time frame will be 4 hour, medium time frame 1 hour, and lower time frame 15 minutes. So let's go into example. Let's go to the charts, the good stuff, the things we like. Just remember this: framework, trade management, and time to entry point. So I have an example for you. The time frames I enjoy the most. I'm a scalper. So over here I have an example. This happens a few days ago on the Euro USD. So as I was telling you, the higher time frame, on the higher time frame we have 1 hour, medium time frame 15 minutes, and lower time frame 5 minutes. Right here, 1 hour, 15, 5, right? So on the higher time frame we have the framework. So what we have here was on the 1 hour chart, we see that in just a second, we see that we have, this is the lower low from the daily, from the previous day. So we see that the daily sell side was taken, correct? And after this sell side taken, we have a change on the structure, correct? That's something we have to see. We want to see, we have the change on the structure, and then the daily buy side liquidity was set just right there. So after that, what can we also see on this time frame? We have the fair value gap that was originating this change on the structure. So this is where we want to work the trade management, the structures. That's where we want to work, where on the medium time frame. So right here we want to see the development that the charts have here, the price, the delivery price over here, right? We see how it beautiful trades within, right? Just a second, just right here, within this fair value gap, correct? And we also see that we have, within this fair value gap, we have again a sell side taken, correct? Which sell side? The London launch. It was at 6:20 a.m. in the morning, New York time frame, or New York local time. So we have the London launch liquidity, sell side liquidity, that was set to be taken on or during the New York session 8:45 a.m. correct? So we have within the 1 hour fair value gap, or within the framework, the workspace, within that space, we have the sell side taken again. And once again, because to work with the triple screen, we have to have in mind, or we have to keep in mind, that the market is fractal. So this is something really important on this type of a strategy. So as we had the sell side taken on 1 hour, and then a change on the structure, we have the sell side taken again, and a change on the structure. What else do we have in common on these two time frames? The gap, the fair value gap that was originating, correct, the change in the structure. We also have it right here. So we had a 1 hour fair value gap here, and then on the 15 minutes time frame we have a 15 fair value gap, 15 minutes fair value gap. That's where we have what? Our time and entry point, correct? So once we have right here again the change on the structure, we have this lower low, that's the one that had the sell side taken, the sell side liquidity, and then we have this higher high, which is the buy side liquidity that is now put in place. Correct? So we can use our Fibonacci from this lower low. Again, why this lower low? Because this is the one that managing as a fractal market capture the sell side liquidity within the 1 hour fair value gap. That's why this is the important point we want to work with. And then we have the higher high. Correct. I personally prefer to work within these 2 points. These 2 points. Sorry, between 0.705 and 0.79. I call this, or my mentor called this the OTE, the optimal trade entry. But we also know the golden ratio, right? Which is the golden gem of the Fibonacci, which is 0.618, and we can see how it beautiful synchronized with the higher point of the 1 hour fair value gap. And it is when the 15 minutes, this is so beautiful, guys. This is where the 15 minutes fair value gap also was originated. So that will be our entry point. And now, which one will be our exit point? We can have our first take profit using the extension. So if we have the 0.618 entry, the extension will be the minus 0.414. So I just want you to see and be amazed of this fractality of the market, because I really am. I want you to see if this will be our first exit or our first take profit. I want you to see how it beautiful delivers over there. Over here you can see the open, the high, the low, and the close of each candle, right? So I want you to see the extension. It is 1.05724. I want you to see the higher or the high of this candle right here. It is 1.05724. Exactly the extension. That will be our first take profit. But since we're working on the triple screen, the higher time frame is our workspace. So we are attacking the daily sell buy side liquidity, since we already took the daily sell side liquidity. So this will be our final take profit point. And also I want you to, in just a second, if we synchronize this so we can see it on the other time frame. I want you to see this. This is 1.06106. I want you to see this higher high. This higher, it's over here. It's 0.06113. Well, that's just 8 micropips away from our exit. So this is how you can use the triple screen, and this was an example on the scalping area. But if you want to check this, I will recommend you. Remember, please, these are not training ideas. They are just insights that will help you through your trading path. And you can also try to fix your strategy, your personal strategy, with this triple screen information, or this triple screen scenario. It will give you different information from different time frames, so you will definitely have a higher perspective of what's going on in the market. If, for example, you are a swing trader, I will recommend you to do a a back testing of this strategy using your three different screens daily as the higher, 4 hours as the medium time frame, and 1 hour where you will find your entry point. I hope you like this. You like this strategy. For now, I have to say goodbye. So just don't forget to subscribe and share this with your fellow traders. For now, I wish you good luck and good trading.